But Firoz Aziz, hi, morning. Have the inflows for SMID schemes coming for March seen any pressure? Was there any panic that you sensed amongst investors? Because, this is one segment of the market which has seen phenomenal strength over the last 12 to 14 months. You think flows are going to remain strong or there could be an aberration?
I personally think the flows can remain strong. That's from a future standpoint. If you look at March 13, 14 days, if my estimate is right, we've got on the day when small cap fell the most, I think about 300 odd crores came into small cap funds in total. Of course, that's an estimate. But I think flows are largely driven by past performance. That's the kind of behavior. If you test this hypothesis that how do investors behave in India, they don't just look at news and then decide whether their investment is going to go, right? So many people would not even know who's their fund manager, let alone who's the chairperson of SEBI and what he or she is saying. So I personally think past performance is what drives retail investment. Largely, of course, education from channels like have created a paradigm shift in behavior. But the kind of long-termish thought process which investors have, I don't see a large dent unless the sentiment is bad and continues to be bad. March has been reasonable. Flows positive is what my estimate is.
If all mutual funds are indicating that there is no stress, then why do you think, what prompted SEBI to come up with this kind of a scrutiny?
If this question is for me, let me take that. So I personally think, if you look at the kind of rally we have seen in the small cap index has outperformed Nifty by about 25-27% this financial year, if I'm not wrong. That's point one. If a rally like this happens at an index level, there are constituents. There are about NSE 500, there are 34 constituents when I last checked, which have tripled in NSE 500. There are about 35 stocks which are greater than 100 PE. There are about 70 odd stocks greater than 70 PE, and so on and so forth. So there is going to be scrutiny for the fact that there are some stocks which are in extreme valuation levels as well. But in the same index, which is a 500 index, there's a stock with 10 PE as well. So I think to get down to brass tacks is what I think SEBI has intended this time around, rather than at index level, going into fund level and finding out liquidity. So point one, if you have such kind of rallies, I think it's regulators' concern that new investors should not get a shock with larger falls. And these kind of shakeups are very, very critical, because during, say, shakeups like these is when money or stock moves from impatient hands to patient hands. So a certain correction is always good. And of course, that was not the intent of SEBI, but I think the shakeup really moves stocks into solider hands from those little impatient ones.
Feroz, were you waiting for the outcome of stress test results to make up a view on AMCs and some schemes, or this is something which is just routine and you will not pay too much of attention to it?
So I would, Nikunj, definitely pay some attention to it because every fund is of a different nature. If you look at every fund, one of the key criteria we look at internally is the kind of free float, weighted average free float of each fund. If the free float is low, then the price discovery is low. So every fund you can find out what's the average free float, weighted average free float of the portfolio. That's one thing we look at. Now in the small cap space, you have free floats ranging from 59% at a fund level to as little as 17% at a fund level. So if you're worried about liquidity, weighted average free float is one great barometer to check on the fund. That's one. Second, how much of the stock is in FNO? A portfolio like Quant Midcap has 71% of its weight in FNO. FNO stocks have great price discovery because there is a possibility of somebody wanting to take a bearish position without actually owning it. Short positions are possible. So price discovery in FNO stocks are so much better, is why they don't have circuit limits. So I would be more comforted. If liquidity is my concern, I would definitely like to check this reading of what's my fund's total exposure, weighted average exposure in FNO. Now coming to the fact of the entire stress test, I think it speaks of liquidation, it speaks of risk, and I'm so happy that in the public domain we are finally speaking of risks at a fund level. Standard deviation is something most investors don't understand. They don't understand what's beta, what kind of time it will take to liquidate. So I'm very happy that this kind of disclosure creates curiosity in the investors of trying to see both sides of the coin. It's not just about the return, it's about the risk as well. And risk cannot always be in English, high, medium, low. And I'm so happy that this is the first step where the regulator is forcing an investor and shaking him up to say, why don't you read what's the standard deviation? I'm so happy in the risk or the stress test, there is also 1 standard deviation, 2 standard deviations, 3 standard deviations mentioned. And I thought that was another 10 years away for an investor to look at these sigma ranges, and he's seeing it today. And I'm happy about that. But I think there's one little drawback of our stress test. We assume that every fund manager is operating in a mutually exclusive market. All the volume of a specific stock will not be absorbed by one fund manager. So if you look at the volume, all the fund managers coming together and they hold intersecting stocks. So I think great first step. I think a little more statistical betterment will happen over periods of time, but I'm very excited. The risk numbers are spoken far more deeper today than they were just yesterday.